Suzanne, how you doing?
Good. Doing great.
We are going to be talking about lenders today.
Perfect.
And you're a lender, right?
I am a lender.
I was curious. I was walking over here and I stopped by the bank and I got a bunch of money. Is this how you lend money? When somebody wants a loan from you, you start like...
I think that's what people envision. I think when I go to closing, sometimes people think I'm just bringing like a suitcase of cash with me, but that's not the lender I am.
I actually sold a house one time to a dude. This was like 15 years ago, and when we signed the contract, he actually brought a briefcase full of cash. It was like $42,000 cash that he brought. When we were just signing the contract, it wasn't closing or anything.
He just like casually just gave you.
Brought a suitcase.
Wow.
Or briefcase. That's kind of weird, isn't it?
That is. $42 grand. That's a lot of cash.
It is. It is. I don't
What'd
think
you do with it?
I gave it back to him. I couldn't keep it. He walked out with it. And then a week later, we closed at a title company.
That's good.
All right. Today we are going to be talking about hard money lending, or what a hard money lender is, mortgage brokers and what a mortgage broker is and under what circumstances they're the appropriate kind of lender, and local banks. And maybe we'll throw in a couple of little things.
Commercial lenders too, with local banks.
Yep. So let's start with a hard money lender. So you know the hard money lenders really well. So what is a hard money lender? Where would the average person use them? What's the purpose for a hard money lender? That type of thing.
Yeah. So I'm obviously a hard money lender, and what that means is we do short-term business purpose loans for rehabbers and landlords. So, when someone would use a hard money lender is, they find a property that's in distress, they've bought it at a discount, and they're either going to fix it up and rent it out and refinance with us, because again, we're just a short-term loan, or they're going to, fix it up, put it on the market, and sell that property. So it's really great for rehabs and rentals that need some love before you get your long-term financing.
Perfect. So basically a loan for a real estate person. It's all real estate, right? You don't do short-term loans on jewelry or anything, do you?
Yeah. So just real estate, no one's personal house.
Pretty much single-family houses? You do multifamily at all?
I pretty much do single-family, a little bit of like duplexes, 4 families occasionally. If you're looking at like, an apartment complex, that's not what we do. I know a lot of people like storage units right now. We don't do storage units.
Are there hard money lenders that just do multifamily or storage units?
Yeah, there are some that exist out there. Typically, those people tend to be more national lenders. With hard money lenders, you have your local people, which is what we are. We, perform in the St. Louis market. That's the market we know. It's the market, we're really focused on. But then you have, these nationwide lenders that are backed by hundreds of millions of dollars, and they're the ones that might be really into a big apartment conversion or looking at a storage unit.
Is there any situation in which somebody would want or be able to use a hard money loan for their personal house?
If you structure it the right way, you have to be really careful, because we have to be careful. We are not licensed to do, residential loans. As soon as you do a residential loan, which means as soon as an individual lives in that house and it's their personal residence, we automatically fall under a bunch of federal guidelines, which the types of loans we do don't fall under those guidelines, which is why we can act really, really fast. A borrower can get a house under contract, and if the title company's ready, they can bring us a loan on Tuesday, and we can fund that thing on Friday potentially. Your residential lenders can't operate that quickly. So if you wanted to try, you could see if a hard money lender would be open to, if you bought a house at a discount, you fixed it up, you refinance them with your long-term residential lender, and then you moved into it. So that's a possibility, but not every hard money lender is going to be okay with that exit strategy, because it could put them at risk.
So primarily a hard money lender is for your investment properties, short-term loan to get it fixed up and either resold or rented.
Correct.
Perfect. Let's move on to mortgage broker. What is a mortgage broker? Who would want to use a mortgage broker? What's the purpose? So forth.
Mortgage brokers are what people typically think of when they think, I need to buy my house. They're who you go to when you want to buy your personal house. They're, you're going to them when you have a nice product. It's move-in ready. You're moving, your family in there. You're typically putting down 5, 10, 20%. Mortgage brokers are going to have a variety of programs that you can look at. They'll do VA loans, they'll do FHA loans, they'll do, just your standard 30-year fix. So that's their bread and butter is just personal houses. That being said, you do have the option, though. You can have up to 10 houses that are, 30-year fixed loans. So the reason, that we really do some stuff with some 30-year fixes is because our borrowers will buy a house, they'll fix it up, and then when they get to that refi standpoint, occasionally they'll use a mortgage broker to refinance out so that they've got a fixed rate for 30 years and they don't have to worry about rates changing.
Yeah, so a mortgage broker is typically just brokering a loan that is going to be eventually owned by FHA or VA or Fannie Mae or
Freddie Mac, Ginnie Mae.
And one of the benefits is you can lock in the interest rate for a long period of time. Usually 30 years is certainly doable. There's 15-year loans and 20-year loans, but most people use a 30-year loan. So you can lock in your interest rate for that entire period of time. It's the kind of loan that most people use for their personal house.
Yep.
Or an investor would use that kind of loan if they wanted to lock in their interest rate for 30 years. The downside is you can only do 10 of them, right?
Yep.
So if you're a real estate investor that's going to buy 100 houses, you can only do it on 10. So pick the right 10.
Yep. And I've heard they've gotten really picky, and if you own other rentals, even if they're on other loans, they'll still count it towards your 10 these days, which used to not be the case. So you have to be a little bit careful.
Yeah. And the interesting things with mortgage brokers is they're just brokering the deal. So Fannie Mae or FHA makes the rules, and they change the rules a lot.
For sure.
They tweak them. The general principle stays the same, but they tweak the rules quite a bit.
Yeah.
So anyway, that's pretty much what a mortgage broker does. Anything you want to add to mortgage brokers and what their uses are?
No, I think the biggest thing is, like you just said, they do kind of tweak the rules every once in a while. So if you are thinking about, using them for a refinance for an investment property, or going to buy them initially for an investment property, because maybe it's a turnkey property, it's already ready to go, make sure you talk to a mortgage broker first, just to make sure you understand, if anything's changed or anything like that.
Yeah, and I guess we'll come back to the differences here in a minute. But let's talk about what a local bank is and why you would use a local bank for a loan.
Yep. So local bank, a local bank's going to have a variety of options. A local bank may lend on your car. A local bank, is going to do a variety of different kinds of loans. But when I think of a local bank in real estate, I think of commercial loans. So, when I think of a quality local bank, I think of a local bank that loves real estate, specifically loves real estate investors, loves landlords, really. And you find a quality local bank, you talk to a commercial broker, and then most of the time we see them being used to refinance out our loans to get a 15, 20, or 25-year adjustable rate loan. So they're great for that. The nice thing about commercial loans is you don't have a limit. You'll have a guidance line, which is a monetary number, but you're not going to have you can only have 10. That's all you can get. So you've built a giant rental portfolio through commercial banks.
Local banks, absolutely. So you said something that made me think, all of a sudden I forgot what it was. So you were talking about, the local banks, some of them like to do residential loans. And that reminds me, when I was first getting into this business, I didn't know who, there wasn't a big network out there. At least I wasn't plugged into one where they told me to go to these local banks. So I just started going around to different banks. And I found out very quickly that there's some local banks that love to do residential real estate loans, investment property loans on single family houses, 1 to 4 family properties and so forth. And there's some banks that don't. And one of the things that I would encourage people to do is when you go in to talk to a local bank, ask them, hey, do you guys like to do loans on single family houses or 4 families, whatever you're looking for? And if they say no, just turn around and walk out. It's not worth trying to talk them into it. But the banks that do like to do those kind of loans, they're relatively easy to work with. So don't try to convince the bank to do what they don't do. You know, find the ones that do the type of thing you're wanting to do. Okay, so back to local banks. So typically, who do you talk to? If you wanted to go get a loan from a local bank, if you go to the bank, who are you going to talk to? Are you going to talk to the teller or the?
You're going to speak to their commercial lender. So you'll ask who the commercial lender is. It does help, especially if you're just doing 1 or 2 a year. You can really work with any commercial lender as long as they like investment properties and they're excited about that. If you're going to build up a bigger, more aggressive portfolio, I would try to figure out who is the decision maker at the bank. I feel like that's something that you've shown me over the years. When you're just working with a random commercial lender and you're wanting to build a portfolio of 50 houses or 100 houses, it's going to be important to talk to a decision maker, or it's going to take a little while. But if you're just getting started and you're hoping to buy 1 or 2 or 3 rentals this year, I would just figure out through your network, hey, who are the banks that are going to like this? See if they have a connection to a specific commercial lender. But otherwise, you could just walk into the bank and say, hey, I'm here to speak to a commercial lender about a property that I have that's a rental for me.
Perfect. And then you also mentioned that local banks are going to be more adjustable rates. So can you talk about that? What does that mean? How long will they lock in for? That type of thing.
Yep. So commercial lenders technically have 2 programs. So your one program is, you could go in there and you could actually just get a loan directly from the commercial lender to purchase the property and fix it up. The downside is you're going to have to put quite a bit of money down to get that project started.
25% typically.
Yeah, typically. They're not going to lend you 100% of everything. They're going to make you have a good chunk of skin in the game. So that typically is a 6, 9, 12-month loan maybe, and it's just interest only. The more common product that you're going to a local bank for is going to be that long-term loan for your rental property. So it's either going to typically be 15, 20, or 25 years, and it's going to adjust, that rate is going to adjust every typically 3 to 5 years. And what that means is that whatever the market is at that 3 or 5 year point, your interest rate's going to change. So unlike a 30-year fixed, your rate's not just, let's say, fixed at 6.5% for 30 years. Every time it's up for renewal, they're going to do another evaluation on your property, see if the value has changed, because if it's gone down, you might have to bring more money to them. But if the rates have changed, your rate's going to change too. Sometimes that can be a really good thing. Like the last several years, rates just kept going down and down and down. So people were going from like a nice 5.5%, and then the next thing you know, their rate change happened and they were suddenly at 4.5%, and they didn't have to do a refi, which is nice to have that lower rate. But now we're in kind of an environment where rates are starting to go up. So what that means is people's cash flow might change on their properties quite a bit, because they might have been at 4.5 and now they're looking at 7 or 8. So it's important when you have those commercial loans to really make sure you're paying attention to where the rates are at and where they're going when you're up for a renewal. So that you're taking that into account.
Yeah, so just to emphasize that a little bit. So benefit of a mortgage broker is you're probably going to be locked in with their interest rate for 30 years. With a local bank, you're probably going to have to renew your note every 3 or 5 years. It's all negotiable, so negotiate what you can.
Yep.
With a mortgage broker, you're probably going to have a 30-year fixed amortization, your 30-year amortization period. So you're spreading your payments over a longer period of time, which generally helps with your cash flow.
Yep.
Local banks are typically going to offer you a 20-year amortization.
Yeah.
A lot of times they'll negotiate to 25 years, so definitely try. But somewhere 20 is what's typical or
I would say 20 is most common.
Yeah. All right. So the other thing that maybe is a difference between the mortgage broker and local bank is a local bank will do the loan in your LLC. Mm-hmm. Now, they'll generally require you to sign personally, but the loan will be in your company name if you have one.
Yes.
Where the mortgage broker is going to want it to be in your personal name.
Yep. And with the mortgage brokers, it's also on your personal credit. So that's
Yes.
something people should be aware of. With your commercial loans, you're buying them in your businesses most likely. It's never touching your personal credit. They're running your credit to make sure you're a quality borrower for them, but it's never on your credit. Your 30-year fixes are all on your credit.
Well said. So I think we kind of talked about hard money lenders versus mortgage brokers and local banks. Generally, the hard money lenders a short-term loan, and I think you said it. But what's your typical term on your hard money loans?
6 months.
6 months. So it's just a loan for you to buy a house, get it fixed up. That's
Yep.
primarily what it's for. Whether
Yep.
you're going to flip it or you're going to keep it as a rental.
Correct.
Mortgage brokers typically either for your personal residence for your loan, or if you're an investor, for you to keep your rentals long term. And local banks can do both, but their primary purpose is to do longer term loans on rental properties.
Yep, correct.
And anything else you want to add to this?
I think all three can be really great to help leverage your business. So it's just a matter of figuring out, what's the best source for you at the right time, because you can really leverage your business using all three options.
Awesome. And just to sum this up, none of them bring cash to the table.
No.
It's all like signing papers and that's it, right?
Yes, borrower beware if someone says they're going to just give you 20 grand cash.
Awesome. Thanks for doing this video with us today.
Yep.